what if these references are broken intraday, but the day's trading is not over? Then what? All right. So let us look at the next topic, and that is modifying your order book intraday. All right. Now we saw that an order book is just like a potential auction path, and it is fluid, it is dynamic, it is not rigid or static in nature. So let's say there is you have built an order book for the next day, and then market develops. Maybe it takes out day's high. So now you know what happened at day's high, but now it changes because the trading activity there has taken place. Now it changes. Now you have to see and understand how market will develop further from here, and where the smart traders will put in their orders, where they would like to exit, where they would like to enter. All right. And you will have to rebuild your order book. Sometimes it is required, sometimes it is not required, but you should know how to do that. All right. It is these changes that we need to be cognizant of to be a good trader. So you want to use an order flow chart, you need to be aware of how to modify your order book. And you don't need an order flow chart. It will help. It will help you confirm your order book analysis, but it's not compulsory, okay, to have it. Original order book is set before the market opens based on yesterday's trading activity or recent trading activity. Then you track the market's progress and how it deals with various important references throughout the day. Based on intraday market development, you can then make modifications to your original order book. All right. And this process obviously is best understood when we go to actual charts. This is Nifty chart. This is Bank Nifty chart. All right. Now, let us do some, exercise based on what we learned. So let's say this is prior day's range. All right. Now, what were we expecting to see when prices go in this area? We were expecting to see limit sellers. What were we expecting if we break out above this? Again, limit sellers, but also some stop losses getting triggered. Okay, some buy stop losses. So stop loss buy orders were supposed to come into the market once we go above this. And those stop loss buy orders were supposed to be absorbed by limit selling by the smart traders. All right. So when this activity was happening, A and B period, we need to go to the order flow chart. And what should we see? We should see limit selling. All right. And aggressive buying. Obviously, this limit selling is equal to aggressive buying. We should see that happening on the right side of the chart. We should see big orders here, because smart money would have put in some big orders. All the stop losses that were getting hit, they should be absorbed. And then we should see prices coming back below this prior day's high. So that happened. But now we will go to order flow chart and see whether we see this kind of activity or not. This is your 15-minute order flow chart, standard order flow chart that I use. Now what we want to see is, as soon as we break above this yesterday's high, we want to see some limit selling. Limit selling will appear on the right side of the ladder. Big orders. Can we see them? Start from here. 731, 670, 1128, 1011. Do you think that these were limit sell orders? These were limit sell orders because they are on the right side. That means they were aggressive buy orders. That means these were the traders who either were short yesterday, and as soon as they saw this activity, they thought they should get out of the markets. Was I one of them? Yes. I discussed during today's live session that when market went above yesterday's high, I tried to get out of my positions. All right. It continues higher. Again, you can see 500, 500, 800, 400, 700, 700, 600, 500, 800, 700. Big orders. 461, 500. All these are limit sell orders, that is aggressive buy orders. Who are these aggressive buyers? One, they are stop losses being hit. Second, they are breakout traders who were looking to buy a breakout above yesterday's high. They were hoping to see continuation higher and higher. Was I one of them? Absolutely yes. But these limit orders, lots and lots of them, they were one warning that maybe smart money is using this to establish short positions. You also see some aggressive selling happening. You can see here 800, 1000, 900, 900, 400, 600, 400, 800, 700, 400, again 400. So who are these aggressive sellers? These are the pending market orders. They saw prices breaking out. Maybe they observed this limit selling happening and they decided that maybe smart money is using these higher prices to establish short trades. They jumped in with their market short orders, aggressive short orders, and that is why it is showing up on the left side. Make sense? So, third type was pending sell orders. These are market orders. Traders were waiting outside the market. They let the market open, they see how it is developing, and then they come in and they start selling. All this halted the up move and pushed the auction below. So we got limit selling, we got some signs of smart money establishing short positions, pending market orders coming into the market. Looking at all this, this tells us that smart money is from the short side. What is the expected follow through then? For prices to come back below yesterday's high. Did that happen? Absolutely. How did the market come down? It came down very, very aggressively. It went below, yesterday's high. Nice, big red candles, aggressive selling happening. Right? And it just continued lower and lower. Then it stalled here. When it was coming back down, we discussed two references, HVN and point of control. I said if it does not stop in this zone, it will go lower. But it went lower and it stopped here. So what was that reference that was in this zone that stopped this down move? There has to be a support there, right? So let's say there was a support in this zone. And how will we know that the support is getting respected? We should see limit buying here. We should see limit buying here. And we should see some stop loss sell orders happening below that reference. So let us now go to the chart and see if there is any reference that could have warned us of a possible stalling of market here and a reversal. For that, we'll go to the VSA chart. And you can immediately see here the reference I am talking about is yesterday's VWAP. So this was yesterday's high. You go above yesterday's high, you see all kinds of limit selling happening here. Then market crosses below this. It crosses below yesterday's HVN. Then it comes to yesterday's VWAP. And why was yesterday's VWAP important? Because it was a trend or wide ranging day. And we have discussed that wide ranging day VWAPs are important. What happens? Market comes here. Now, we need to see some limit buying here, some limit buying here, and some stop losses getting triggered that are absorbed by the smart money. Now, you don't have order flow chart. Can you make an assessment by looking at, even forget about these, cumulative delta and bell delta indicator, even forget about that. Just look at this chart and can you make an assessment? Let us see if we can. So, let me clear this, draw it again. Now that we have seen, some activity of selling here, we have come back down, we have a potential failed breakout. Now we are coming back down. And this is the next reference, okay? We have HVN, but we cannot use such stop loss triggering and all below HVN, okay? Because HVN is a zone, but VWAP is a reference, all right? Like yesterday's high is a reference, VWAP is a reference. So what happens? Once we hit this, we come near this reference. If there are a lot of limit buy orders here, you should see increase in volume. So on this particular bar, you see a very high volume. What it tells you is that there are some limit buyers available here which are trying to stop the market. Were they successful? No. Market again comes back down. Again, when it comes to that reference, you look at these two bars and just look at the volume. Again, very high. Because more limit buy orders are placed here. Then what we need to see? We need to see my markets going back above the reference. They went above the reference. Was it very, very clean? No, it was not very, very clean. All right. But still, it went above. Every time it came back down, you can see the volume did not cross even the average volume. But then later, what something interesting started happening. Buy volume started crossing over above the average because buyers were coming into the market and they were pushing the auction higher. Now we will go to order flow chart and see if these limit buying, this limit buying is visible on an order flow chart. But even without an order flow chart, you could have made that assessment. All right. Now, as soon as you reach this VWAP reference, you see a lot of aggressive selling happening. 1100, 250, 450, big orders. But all from the aggressive sell side. And all these were bought by limit buyers. Then you break below it. Again, you see the volumes 500, 900, 600, 500, 500, 2600. What is this? This is all limit buying. All limit orders already placed into the system. Aggressive selling happening. Stop losses being triggered. Fresh selling coming into the markets. But all these limit buy orders were already there and they were patiently absorbing all the supply. Make sense? What is happening here? We are seeing some aggressive selling being stopped at yesterday's VWAP. This tells you that the smart money is absorbing the supply. Does that mean the down move will stop completely? No, it did not have to. But this gave you an advance warning. So if you were short, this particular market behavior warned you that you need to tighten the stop loss or cover your shorts. And if you are not short, if you are looking for long trades, this gave you confidence that okay, market looks like stalling here, smart money is coming in. Now we need to look at some low risk entry points to establish our longs. And if you go to this chart, you can find it. See, no supply, no supply. again, it goes higher, again it comes back down, no supply. Here also no supply. Here some sign of strength. You could have used any of these signals to establish longs. Or let's say it's late in the day, you don't want to establish longs, but if you are short somewhere in this zone, maybe after the break of VWAP, you could have covered your positions here. You need not wait for your stop loss to get hit, but you can cover your positions on a logical basis. So that is how you can build your order book. Now, is it going to be so easy that you can immediately pick up how to build an order book? Absolutely not. But can you watch this video again and again and understand it better and better every time you watch the video? And then, in a few days or a couple of months after practicing it on the charts, you will be able to understand this kind of action happening in real time and take trades based on that. Absolutely possible. I have no doubt that you can do this. All right. So that is how you use these indicators. All right. And that is how you build your order book and track it, monitor it. And now, like, once this has happened, okay, once this has happened, for the next day, obviously, this is an important reference. This is an important reference. What do you expect here? Limit buying, and stop loss sell orders, limit selling, and stop loss buy orders. The VWAP is sufficiently flat, so if at all we open lower, then VWAP will become important. But if we just trade in this area, then VWAP might not be that important because it's not a very, very clean trend kind of a day. All right. Also, if you look below, you see that delta has crossed into the negative zone and it stayed there. So there is some negative bias, and we will see tomorrow what happens. All right. But this is how you build your order book, and then you monitor your order book and see if this kind of activity is happening, and then you know how to monitor for the follow through.